Guys, good afternoon. Steve Vetterl here, managing partner FXESTrader.com. Welcome to the Thursday Slow Summer webinar. Today's the 25th of July. I'd like to welcome everybody to the webinar. We've got a fairly decent crowd here today. If you guys have never joined a webinar that we've had, this is the webinar number 3, Mastering Risk Management to Make More Money. This is the third webinar in a 4-part series that we're shooting. Going to be probably more content rich today in versus using a lot of different examples of charts and stuff that I've used in the past. But I think this is a really important subject. I can't tell you how many folks that I have either met or traded with that say they have a risk management plan, but they really don't use it or exercise it to a large degree. And when they complain about having losses or blowing out trading accounts, I always come back to the fundamentals of just broad, generic risk management up front, and I find they're not sticking to even the simplest stuff, like something like knowing what news stories are coming out at what time today and the traditional impact that they've had. So, you know, some of this may be a bit beginner for some of you, but I think this is an important concept to generically touch on like we're going to today. We can certainly build on this in a heck of a lot more detail in the webinars down the road, but I think this is of critical importance to the core theme of our company, and that's getting people on a path to consistent profitability. So I'm going to go through this a little bit today, just kind of give you guys an overview what we're going to do today. I'll typically take a quick poll in the beginning, which I'll pop up in a second. Just want to get a feel for who in the room's traded futures before and used the either market profile systems or the market delta charts. We'll go through and define risk management, why traders don't use it, and you know, it leads to losses in the accounts and so forth. We're going to touch on how to effectively use leverage to your benefit to make more money, because let's face it, that's the bottom line in trading. I think it's important for us to go through position sizing and how capitalized a trader should be as far as account size. Obviously, a lot of that completely depends on how profitable the trader is or not, so we'll touch on that. I have a small risk management checklist. I think that's important. I may build upon that a little bit today depending upon how much time we have. I'm allocating probably anywhere between 20 to 30 minutes for content, and we can go through the... While I still have this overview screen on, let me just put up this poll real quick and tell me if this poll's showing up for you guys. Okay. So essentially, you can answer these questions more than once. So I just want to get a feel for, you know, who's traded, who's used market profile, who's used possibly the footprint chart, you know, who's traded futures before, who's never traded futures. So a bunch of sort of fragmented questions, but kind of give me a feel for where everybody is in trading. So, all right, so we've got some folks in the room that use other software. Okay, that's good. You guys can go ahead and answer the poll if you haven't already. That'd be great. Give me an idea for who we are. I'll slightly cater, as I often do these webinars, to the pulse of sort of the audience, and I can twist that around a little bit. So looks like we've got about 60% of the room actively trading futures. Okay, that's good. All right, super. If we have time today, the bonus at the bottom, the new footprint chart type, which is called the Delta Imbalance, which is essentially like your own little built-in algo. I'll go ahead through and touch on that. I've been working a little bit with Trevor at Market Delta to, you know, give me just an idea on how it was built and sort of the things I should be aware of. But I've been using the thing for about a week now, so it's been excellent. And I'm going to touch upon, I'll pull up my charts and you know, how we can use risk management and sort of how I put it all together and how I frame out the day, and what specifically I do each day to prepare for trading. So it's going to be sort of the core beginnings of what I do to prepare for the day using risk management. So with that being said, if you guys are just joining us late, looks like a few of you are joining us late. I'm actually going to close the poll down now here. I got a feel for where everybody is. Wanted to, most importantly, if we get a chance today, also the 6 steps to consistent profitability. I have had a number of folks email me requesting this. This is more of a generic 6 steps, but I think it's important to, and we'll touch on that again if we have some time. I want to try and limit this to me talking for maybe a half an hour or so. Then we can get into, you know, Q&A, which I think is the important part of this webinar. So for the folks that do not know me, my name is Steve Vetterl. Let me just jump back to our homepage here. This is our website. I would encourage you guys to, let me just jump back to the homepage. If you want to read a little bit about us, you can go to just fxestrader.com, scroll down to the bottom. You can click on like who we are. You can take a look at the testimonials. You can view my profile on LinkedIn if you wish. A little bit about my bio, resume, so forth. If you want to, you can read at the bottom, all that fun stuff. Cool little video we did. I have a fairly decent sized Twitter following. This is my Twitter page. If you guys cannot see any of these screens, I have a tendency to click around. I know to go up in a web, but I post a lot of stuff on Twitter, and this is important because it's part of the subject of risk management, in my opinion, especially when it comes to news. And I use Twitter in probably a different form than many, and I'll go through how I use it and how you can replicate exactly what I do for preparing for the day. But let me just jump back into the slides here. Let's get into the... So let's define this. So what is risk management? Okay. I view it as a process of identification, analysis, and either acceptance or a mitigation of uncertainty in trade decision making. So essentially, risk management occurs anytime a trader analyzes and attempts to quantify the potential for losses in an investment, and then takes the appropriate action or inaction given their investment objective and risk tolerance. So as we can probably imagine, inadequate risk management can absolutely result in severe consequences and more than likely blow out your futures account. So the risk management I look at as a two-step process. So determining what risks exist in a trade and then handling those risks in a way that, you know, is best suited to your trade outcome. So, you know, long or short, it should occur everywhere in how you view a potential trade. Risk is management is everywhere in the financial world. It occurs, you know, in anything from buying or selling bonds to how guys that run hedge funds, you know, hedge against their risks, currency derivatives, so forth. But that's, you know, that's basically the boring definition of risk management. The key thing to me is when you're looking at risk management in terms of the markets, there is 3 factors that are important to note, and keep in mind, I'm getting a couple questions on this. We're shooting this in Camtasia Studio 8. I'll edit it, and as I have with my other webinars, I'm going to upload it to our YouTube page, which we'll link to through the home page. So if you guys want to go back again and watch this, maybe take some notes or what have you, you'll be able to see this as many times as you want on YouTube. But as far as the markets, we have both fundamental, technical, and liquidity. And the key thing with fundamental drivers is you always want to be aware of the things that are going to move the markets up or down. So any type of news that's coming out, any type of numbers, whether it be sentiment, economic reports, seasonal stuff, you know, certainly the jobs numbers every first Friday of the month, anytime the FOMC minutes are released, or certainly Ben or any of the voting Fed members are speaking around the world. And really recently, in terms of the dissent that we've seen by some of the FOMC members, it has been very helpful to your trading to know, you know, if not necessarily specific to each governor, but you know, who's on the dovish side, who's on the hawkish side. I mean, that I can't tell you how many times I've been caught in a trade in the early days when I was learning how to trade, and you know, I wasn't paying attention to what was being said by the Fed. I didn't know the schedule. And you know, the Federal Reserve posts their speaking schedule each day, as I'll go through in some of my early morning prep that we do with a number of folks in our trading room each day. So I'm going to go through the exact same process that we go through, folks, every day in our trading room to get prepared for the day. But the key thing is with the fundamental stuff is just always be aware of what's going on. And this sort of dovetails into that Twitter page that I showed you and how I use Twitter to get a heads up on news. You know, people's opinion certainly counts, and the smarter the bigger and the larger the following some people have on Twitter does give certain people credibility in what they say. So, other than following the big news outlets like a Bloomberg or a Reuters, or certainly following a Wall Street Journal and any of the other APIs that I do that are market related, it's also important to follow people that are influential. I'm not talking about anybody on CNBC, by the way, that are influential in, Twitter. So I'll follow those guys. Sometimes they'll break this news before the API does. I'll teach you 2 people on Twitter that I have. I'll give you their names and their Twitter handles that actually break the news about 4 to 5 seconds faster than the APIs do, which is excellent for a prep and certainly takes a good amount of heads up, if you will, before it hits the other news sources, and that ties in nicely with risk management. So let's jump down to liquidity. The other important thing that many do is they'll try and trade in a market that's not liquid, or try to trade during a slow period of time. Anytime there is a lack of liquidity, I don't care what type of instrument it is, whether it be a futures contract or the Forex markets, anytime there is thin trading, you have a significantly higher percentage of your setup not working. Why? Because volumes are thin. So is any trader trying to get to a consistent profitability path using futures or using Forex, or maybe the currency futures to trade in the CME? Almost always recommend sticking with liquid markets first. Not off cowboy and trading corn, or something that's just off the charts with volatility like lumber or any of the hard or soft type commodities. Same thing can be said with trading a lot of the third tier currency pairs out there as well. And maybe this certainly goes without saying, but you want to become consistently profitable trading something that's liquid. And for all the reasons that you see here, you've got ease of entry and exits, especially if you want to trade large at some point, the depth of the bid and ask, which is critical to me because the footprint is the when of when I execute. Everybody has indicators that teach us the where of to execute and all the confluence that may be around a certain type of support and resistance or any of the other zillion indicators that are out there. But the when to trade is what the footprint can do for us, and we need a liquid market in order to be able to execute reading that chart correctly. Let's jump on a little bit further here. Let's go through some concepts. Leverage. It's probably one of the most overused words in the financial media, but in certainly what led to the financial crisis globally. But it can be managed. So if the risk capital is limited, just reduce your number of contracts traded. And I know this seems inherently fundamental. Man, I can't tell you how many times I've seen buddies of mine just throw out a 10 lot when they should be trading 3 in the ES as an example. So if you're day trading the E-mini S&P with a $2,000 account, and you just 4 ticks is 2.5% of your account. In most risk management plans that are written, the max loss in an account in a given day is 2.5%. You're already at a disadvantage there. And I could not find the chart in my database, but there is an excellent chart out there if you guys want to Google it, and it goes through how many trades you can execute in a $10,000 futures account, and taking very, very small losses, how many shots you get trading it before you blow the account out. And I tell you, that chart was just an absolute eye-opener. And if I can find it, maybe I'll stick it in this webinar before I edit it and upload it, but I couldn't find it for the life of me. It's always important to remember that you can lose more than you invest as a result of the ability to trade with leverage. Position size, again, same thing as I was mentioned before. Even if you're able to trade many more lots in a, let's say, $5,000 or $10,000 futures account, consider the position size in your risk management approach. Anybody that opens a $10,000 futures account at, most brokerage firms are offered anywhere between $300 to $500 leverage per contract of the ES traded. So it'd be very easy in a $10,000 account to put on a 5 lot or put on a 10 lot. Heck, you could put on a larger lot than that. But take some significant losses, it's really going to pull big chunks out of that account, and it's just a matter of time before the losses will blow out the account. And I'm not saying that as a bad thing, okay? If you are an exceptionally well-capitalized trader, and you've got, hundreds of thousands, or in some cases millions of dollars, as a few students might have had, you can afford to blow out a bunch of these accounts learning how to trade. I think it's a waste of money, but, I know a lot of people that came in, didn't get any help. They weren't looking for folks like me to help them cut the learning curve down, and they just went in at full bore, no risk management plan, no plan period in many cases, and they blew out 2 or 3 futures accounts, and all of a sudden they're down 50 G's. Please be careful, and don't just set arbitrary rules as far as position size. Always adjust your size to a level that enables you to think clearly and rationally, because as part of risk management, getting control of your inner monkey, as I like to call it, the psychology around you trading, is as important a component in your risk management strategy as anything you can do. It's not the setups, it is your ability to make decisions at a acceptable level, I guess, for lack of a better term. Let's go into risk capital. I kind of already touched on this, but I think it's imperative to examine, what percentage of your capital will be applied to the strategy you choose. So if you're trading the ES long or short and you're going scalps, or you're intraday trading or so forth, you're really going to want to, and I'm a little bit outside of the box when it comes to placing stops, because I think that it's critical that stops get placed looking at especially when it comes to trading the ES. A lot of people ask me, well, where do I place my stops? Well, if you're using the tools that I'm teaching or that we're using in our live trading room every day, you're going to want to place the stops where you think the other piles of stops are not already. So if that seems confusing to you, just think like an algo. And what are a lot of algos out there written to do? They're written to stop hunt. And they'll go up to given areas, and if we have time, I can certainly jump into the Market Delta software to show you today as a great example of some serious stops that were run. I mean, it was a total bear trap coming into this afternoon, and we just squeezed the shit out of the bears all the way up in the market. Looking at the stops, I'll kind of get a little more detailed in that, but I don't believe in setting stops at a set dollar amount, because many times you'll see the market go up to where all these groups of stops are, only to turn right back and around, and your trade would have worked. So you have to be willing to take a little heat. I know I do get accused by some, especially my competitors, that I do take some heat, and yes, it's true, I do. But I have enough belief in my trading, and that I don't have a problem adding to a trade and letting it play out. I've sat in a losing trade for 8 hours at a clip sometimes because I was too bullheaded to give the, just to take the stop out. And eventually, in almost every one of those cases the last 6 years, the trade worked. I just needed some patience. So I'm going to say that because I'm a consistently profitable trader. In the beginning, I would not recommend that. Bullheadedness will blow out your accounts. But the concept of stops and where to set them is easily another hour of a webinar that I'm not going to really bore you guys with today. We can certainly get into that, at a later point, especially if you guys have questions related to that. So let's go on. Our checklist. There we go. Account size, we talked about that. What percentage of my account balance will I be risking? What futures contract, month and year am I trading? And just a side note on that, I always recommend trading the front month contract. Right now, that's the September for most of the contracts we trade, which is month U. How much is a tick worth? We've talked about that. $12.50 per tick per contract in the ES right now. Side note, I can't find the news story, but I'm told by the CME that they are coming out with an E-micro, and it will be $2.50 per tick. So it's going to be 1/5 the size of the ES. I think if we do get an actively traded, a decent amount of volume that comes with this new product, it will be a hit. And I think it will significantly change the amount of futures accounts that get blown out by small or new traders that are looking to trade the market. Now, I challenge you guys on this webinar to find that news story and send it to me, because I can't find it. And the PR people at CME have not got back to me yet. This was an email I shipped to them about 2 or 3 days ago. If anybody can find that, that would be great. But you know, looking at that. Also keep in mind, when it comes to the account size, you really don't need to do a super amount of analysis on risk management. If you put, let's say as an example, a $10,000 in a futures account, but you have a couple million somewhere else, this discussion today is not as important to you. Why? Because you are considerably more capitalized than most getting into it. So, you know, I'm not saying go out there and mess around and, you know, be smart about that. You don't want to piss the money away, but, you know, have the ability to, you know, be willing to find the right mentors that can help you cut the learning curve significantly down and get you to profitability. And you know, that's really the whole reason I built this entire website. I had many friends say, hey, you know, Steve, you're not really a coach, you're not a teacher, and I'm not some polished guy presenting stuff. You're a trader, but heck, you've got the ability to get these people educated. Why don't you set up a website? And I said, okay, well, you know, I don't know how to build websites or get into any of that stuff, but you know, my superstar partners down at Blue Leads in southern Florida, the owners are one of my good friends from high school. You know, we decided to do all this, but you know, I kind of really was, I don't know, I guess for a lack of a better term, I've been disturbed by the kind of education quality that's out there, because I think it focuses on all the wrong stuff, like, hey, join our room, we'll call out trades, we'll show you our setups, and it really doesn't teach the trader how to fish, because they're fishing for you and they're giving you little bits and pieces and nuggets. So I said, if I'm going to do this and I'm going to build an educational website in a room, you know, and build a product that can be purchased on this, I want it to follow a path to consistent profitability. And risk management is probably the single biggest component that is going to run as a constant theme in everything that's done on that path. So, you know, not to belabor the point anymore, but I think you guys get the gist of how serious. Let's go back and let's jump into, let me just close this out here. I want to jump on to the software today and show you guys. I'm getting a quick question about, somebody sent me an email about the room, but you can just click on the tab right here, trading rooms right here. But in the morning, we prep using risk management quite differently, and we start off our morning by looking at what's called the day types. So we are auction market theory, we are market profile traders. We want to frame the market, and we frame the market by understanding the very big concepts of not only the day types, and this is the E-mini September contract we're looking at. This is session 2, so this is only the RTH, or the regular trading hour session. It opens at 9:30 a.m. in New York. But we want to look at what the day types are, and we want to get a feel for the different types of days. If you're confused by any of the terminology on this chart, I would suggest going to the resources tab on our website, click on trading terms. You can go down and read all about the different types of day types. And what I love about Market Delta is it allows the right formula, and this is a custom code here, to tell you what the day type is. So it takes a lot of the guesswork out. Now, in my opinion, many of these day types, especially the normal variation ones, I look at these more like trend days. So a neutral extreme, I find that to be more of a trend day. So sort of grouping the trend and neutral extreme with normal variation, especially if it's an open test drive down or up as far as the opening type, I'll lump those into the same category. But risk management is about understanding what has happened before and how it may affect the future. Doesn't mean it will, but it means that you're looking for a statistical advantage, or a edge, if you will, in understanding market structure in the past. Now, we can see here we're looking at the ES over the last month and a half, a little bit under 2.5 months. we've had a lot of really outside of the box moves. We've had a lot of poor structure, okay? So what can we glean from that if we're on the risk management theme is that we have an unfinished auction. We certainly have an unfinished auction to the downside. We corrected all the way to 1553. We bounced off that level and we rocketed up on low volume and very poor day market structure, which is quite evident with the multiple gaps that we have to the upside that you can see on this day chart. So, in prepping for the morning, understanding, beyond that, what news is on tap for today. I know that, let me just, was something hopefully you folks have had a chance to download when you signed up for the webinar. It's actually a really good sheet. We still use this every single day in the room, and it helps us answer lots of questions. As I had already talked about, the day types, as you can see here. The open type, again, if you're confused with any of these terms, just go to my home page and click on the resources tab and go to the glossary that I have on all this. We want to know the direction of trade, okay? If you're using market profile, where are the value area highs and lows? In number 5, and I don't know if you guys can see this or not, questions that should be posed in number 5 are what I like to call the 3 scenarios. I want to develop 3 scenarios for what can happen today. So I'll give you an example. Today, 3 scenarios. We open up, auction in range, and extend the move down. Okay, this is oversimplified for today's discussion, but I can certainly get into that. Whereas an example of a different scenario would be we have another trend day down and some news breaks, or we spend the day, as I thought we were going to be doing, auctioning inside range, which is pretty much what we did. You want to get all these questions answered. You want to then move the calendar, as you see here, and I'm hoping everybody can see I've moved to forexfactory.com's website. So again, our recurring theme of market information, it's basically all the news that breaks. The thing I love about Forex Factory is it's accurate, and it has, if you click on these little file folders here, so for instance, for any of the durable goods orders that came out today, you can see it'll give you a review of what happened in the past. And this is perfect for understanding the ramifications of previous news releases, okay? Not as much related to this. Much more so related to how the market acts historically after something like the FOMC minutes are released, okay? So if you want to, you can just click on any of these and read about all that cool stuff. So just jumping back to the homework, page 2 of it is the questions that I like to call the Trader Daily Checklist. And these are all the questions that you're constantly asking yourself all day long, okay? What is driving the market? Fundamentals, economics, stock specific, okay? If you're trading the NQs this week, which is the NASDAQ futures, you were trading stock specific for the most part this week, because obviously some large numbers came out from, or I should say the last 2 weeks, large numbers came out from, all the big tech bellwethers. And all of those, really showed a lot around how that worked out. But, looking at and I'll give you guys just a quick minute to read through this. I'm going to put, okay, so top down, bottom up. And a lot of these are market profile centric questions, but essentially you're getting all of the things answered that's constantly been asking you. Is the market one time framing up, one time framing it down, or trending up, trend down, same thing? Is the market, looking for some sort of news? Are we stuck in a small balanced area chopping around for news, or chopping around because the volumes are low? Anytime we get caught in what I like to call chop, the range that you're in, or the balance area of that particular shop, and I'll show you some examples when I jump over into the charts, but I think that it's critical to understand what the market's doing from a framing standpoint. And you know, if we're balancing around, you can certainly take the, or if you expect it to balance, you could take the extremes of that trade up or down. So things like, you know, yesterday's trade and how those come across, and you know, how they view, how's the value area, what's the volume like yesterday, what was the shape. Again, some of those can be answered just looking at day types that you see here. Let's put a little bit of this into practice, and I'm just going to go through this real briefly because I want to stick to an hour on this. So here is the market profile chart on the left hand side, I hope you guys can see it, of the ES September contract. And looking at, you know, how the market is auctioning is as important is going forward as what we can view in the past. So we see that, and I'm actually going to make this a little bit smaller so we can see a bigger picture here, but let me just expand this out. And we are looking at both the RTH session that you can see right here with my arrow going up and down. We're also looking at the Globex session. So I actually have both of these profiles on one market profile chart, and I split them out. And I do that because I want them to, okay, so what I do, you guys should be able to see an expanded out market profile screen of the ES. I like to have both the Globex and the RTA sessions on the same profile for the very reason that a lot of the overnight trading or the Globex session for the ES has brought about significant changes to the gaps that took place the next day. So in terms of, you know, putting the potential risk of how we're going to trade in the opening in New York, for instance, this morning at 9:30, I think it behooves us to look at the Globex session, okay? So you can see how we spent a fair amount of time balancing through a number of both day type and overnight sessions here between the 1695.50 area-ish all the way down to about 1687. So you can see all this. I'm not going to draw any lines on this because it's a pain erasing them, but you can kind of see the prices here of these areas. But look what happened in the opening of yesterday morning session. We basically had what's called a open test, meaning we ticked up a little bit, then volume hit, and we just drove down and built a B-shaped profile throughout the majority of the day and continued rotating down after a couple of pullbacks. So yesterday was an awesome day for us in the room. We had a number of really good trades pay, and you know, I think understanding that we broke from this balance area and that the risk was to the downside, and basically the many areas down here of stops all got taken out. So I think this is a great exercise in understanding how to frame the market from a risk standpoint and knowing, you know, how to trade that. You know, so the Globex session that you see here following yesterday, last night's overnight session, did a little bit of auctioning in the beginning, went down and had some movement overnight, had a number of different distributions you can see forming with these peaks on the profile here, and that led me to the thinking that since we finished back up into that area, that we were more than likely going to auction inside of yesterday's range. So I talked about that in the review, we talked about that in the room, we were on alert for that, but we also had the ability with a lot of the market profile setups that you see here. The yesterday's low at 2.5 offered a excellent long. This is actually a market profile setup, so it paid well. I mean, a lot of the other stuff on here, I don't really have the time to get into this because I already got a couple questions in email from some of that, but I just want to give you guys a feel for, you know, how you can sort of put it all together. The other component, before I forget, of the preparation for the morning, what I do in the morning to prepare for is I'll take a look at the daily notes section of mypivots.com. This helps me get a feel for some of the indicators that may act as areas of confluence that are not already on my charts. So I want to take a look. This is actually an excellent resource for doing morning analysis, understanding where both the daily and weekly pivots are. And if some of you are not sure what that is, you can just go to mypivots.com. go to their glossary. It'll explain exactly what the pivots are. But you want to know where they are. This is for the ES contract. If you trade the euro, you're going to follow the exact same steps that I've done today in trading that contract as well, because most of this volume-based analysis that I do, I want to look at the ranges. So this is sort of on that average true range that a lot of folks, because this helps me get a feel for the statistics of what the day's range may be. I want to know where we have been as far as the average ranges over any given amalgamation of days. So whether it be 20 days or 60, I have a tendency to look back at the last 5 and the last 30. And I have both of those profiled out so I know where the value area highs and lows are for a given period of time, the point of control, the highs and lows of all that. So that is my pivots. And let me just jump back. I go next to the Forex calendar. I take a little bit of information off of a website called dailyindexsentiment.com. They kind of help just understand where some of the bigger SPX levels are. This is for the S&P 500. So I try to pay a little bit of attention to what's going on in the 500 index, which sometimes can give a heads up as to what's going on. The analysis also breaks down a little bit further for me in what's called the S&P 500 sector weights. So I have a list of all the top 5 stocks in terms of the index weight in each sector. So whether it be utilities, technology, materials, industrials, healthcare, financials, energy, consumer discretionary, and the consumer staples. I have quote boards up that follows each one of these stocks, and sometimes there's a little bit of a heads up that can give me maybe some clarity on why a particular move is taking place. Again, all part of risk management. So for instance, financials are continuing to crater, and them had just happened to be a leading sector or a lagging sector these days. You want to be aware of any changes in these groups, and if you're not familiar with how to get that, I'm not really sure, but I think if you guys just Google S&P 500 sector weights, top 5 or top 10, you can probably get a sheet. I update this one each quarter. And I think that it's important just to understand what's going on. If there's a particular company that's in the news, the risk is if it's a technology related company, you're trading the NQs, you really need to be aware of what's going on inside technology. So you would be breaking down, depending on the level that you're trading in terms of size of the NQs. This is much more of a wild market like it is trading the Russell. You're going to want to follow some company news or set that up. That is a great dovetail into the problem I have with the Twitter API as you see it here is that it's not streaming. So what I've done is I've gone back and I've put together what I think is a better deal, and I downloaded an old version of TweetDeck and I posted this. You can see the name of the product. I don't endorse this, but I like it because the older version of TweetDeck allows you to have an automatic streaming of the Twitter feed, which is really slick. And if you look at the different things that show up in here, and I'm hoping you guys can see this screen, because a couple hundred people, I would say maybe about 60 or 70 of them are real big traders that offer excellent insight, that post very actively on Twitter. So a lot of the research, we're sharing with each other. They've done for me in some cases, or they're pointing out something to me all during the day while this is streaming of what's going on. And whether it be big buy or sell programs, Hamzy Analytics, as you can see here, these guys post. They have an algo that's attached to Twitter that will tell you when the tick spikes are hitting extremes. So if you're not paying attention to the NYSE internals and a tick spike hits, you're alerted to it, with watching Twitter if you weren't watching, the actual screen. So I've had many times where I wasn't watching the NYSE stats or the internals groups that I have put together. There's about 5 of them I have here. These are the NYSE internals, and I follow the tick, the ADD, the trend, advanced decline, so forth. But those are important to gauge the pulse of the market in how it operates. These are the 6 key elements to consistent profitability. I'll keep this slide up, and I've kind of jumped around a little bit, but I wanted to just give you guys a high-level overview of how I view trading during the day and how I prepare for it. Why don't I go ahead and open up the floor to questions? I would say ask a question on anything, and I'll poke through some other stuff here and make sure I've covered all the subjects I wanted to. So if you guys have any questions on anything, what we do in the trading room, any questions about market profile, questions to a high level, if you start asking a lot of technical questions like, hey, what did the footprint show today? Folks on the webinar that may not be using the market delta footprint, which is a good chunk of you, are not going to know what the question is. So but go ahead and ask any questions you guys have, and I'll run through the 6 key elements to CP. Number 1 being commitment. And I liken this to a professional athlete's commitment to the sport, which is in most cases extreme. Number 2 being positive, not negative. So getting a control of your inner monkey. There is a number of excellent resources out on the internet in the form of both books and blogs that have exhaustively written on the subject of psychology and trading, which I may touch upon at some point in a future webinar. There is just an absolute mountain of content that's been put out on that. If any of you have any questions on some of those links to the website, certainly let me know. But number 3, this is one I sometimes fail to keep myself agnostic. I have a tendency to develop a bias, and that's wrong. So I would say don't fight the market, and certainly don't fight the Fed. Because those guys have been dumping money out of aircrafts for the last 4 years into primary dealer accounts, and it has been difficult for the shorts to get any significant movement on a swing trade basis off of that. So until the music stops, which is going to be pretty ugly when it does, there's still plenty of chairs for people to sit on when the market pulls back. So don't fight the market or the Fed. Do focus on being right, because I think that if you focus on being right without being bullheaded, as I sometimes can be accused of, you run the risk of just being too stubborn, and that leads to losses that get larger and larger, and some of them you just shouldn't be taking. Now, number 5 is really what this webinar is all around. It's just about being conservative, using all the different, because a lot of people say, well, I think I exercise good risk management. When I ask them to demonstrate that to me, in many cases, there's major flaws in their plan. And, it's not that they don't know. They're just not doing in that fashion each day. And, I would ask you to, if you think you're falling into that trap, reassess what you do each day. You don't need to follow exactly what I do, but make sure you're thorough in covering all the areas that can make changes to your trades. Now, there's not enough time in this webinar, but there's a whole other side to this risk management in, choosing the right setups and understanding when the right setups would work, and how you choose to set up your charts, any of that stuff. I would say that if you're not already a volume-based trader as far as any type of historical analysis, I would definitely, and I'll just pop this chart up real quick, at the very least, I would look at what's called a composite. Actually, let me just close this, jump over to the composite. This is the most important piece of any daily research that I do on any contract. Now, I'm not a big trader of spot forex because it's more fragmented and it's not really volume based, and I would rather trade the CME currencies for a lot of that stuff, so forth. But looking at this particular contract, which is the ES September contract, this goes back to the 4th of October 2011. You can see that all of the green and red lines represent peaks and valleys, and all of the what they call composite volume that I have coming on the chart. And each of these areas, which I actually need to extend here, breaks it down. For instance, this upper balance area that we've been in the ES for some time, bouncing around between 1660 and the 1695 area. We know from analysis where all the volume's been executed. We know where the highest point of control is here at the 1670 area, so forth. So I think this, you can really glean a tremendous amount of insight in terms of where the big trades went off, where potentially areas are going to be protected, both long and short. And ultimately that helps. Another part of, I guess, risk management is I have these green and red lines automatically migrated over to my daily, what I call the main chart for this particular product. So I don't need to look back to this, even though I've got 6 screens here. I allocate the, a number of the other screens to both oil and the euro, the other 2 contracts that I trade. So looking at, this here, this is the composite. One of the questions is, what percentage of my account should I limit my risk to? That question is going to be almost exclusively answered by 2 things. 1, are you consistently profitable? Okay. 2, how capitalized are you? So if you're that individual in an example that has, a lot of other money elsewhere, whether it be in investments or real estate or what have you in a business, you are of a much higher net worth. You can afford to lose it. I'm not saying do that, but you are more capitalized. So I would look at that situation much differently than I would a new student that only has 20 grand, and that's the only 20 grand they're going to be trading. You have a much smaller chance, unless you are a fantastic study and you pick this up quick, it's going to be much larger hill for you to climb to become consistently profitable. But I typically would tell somebody to keep it somewhere between about 1 to 2% per day. That way you are not taking much losses, and you can certainly live to trade another day. I hope that answers your question. Do you shoot for a specific profit percentage before you close out? The answer is no, and I need to illustrate that by showing the trades I took today. So let me just move a couple of these around. The expanded candle chart I have here, are the 5-minute chart of the ES. Then please let me know. But let me just expand this out a bit so I can answer this question. My profit is almost entirely dependent upon what I see developing in the market. So for instance, if I got short at 1682 and a quarter of this whole 1682 area here, which I did, I would really want to see us get underneath the 1675 area as we built out. Or if you jump over to the profile, you can see that as we developed out. And again, if you guys don't see my screen, let me know. But this particular profile of the RTH session today, I would really, let me just open this up. There we go. Should be a little easier to see. We were spending an inordinate amount of time up here, and we had what's called a ledge build, and this is a term in market profile land. It's what they call a top ledge. And I basically said to the room guys, hey, if we top tick this ledge and see nothing being executed on the footprint, and this being the footprint chart here, I'm going to take this short. And I have another webinar you guys can watch on how to effectively use market profile or the reading of the footprints. If you guys just go to YouTube, you can watch those and maybe answer some of the questions you have. But looking to execute on what I said as far as targets for profits are almost exclusive of where I see support and resistance in the market, whether it be value area high or low, a POC, some sort of stat from a couple of days ago, like a weekly pivot. I have a tendency to front run those areas. So if I went short 82 as an example, and the trade moved down to 1680 and maybe 1675 or 550 was a big area of confluence, and things like a Fibonacci's or some sort of a Keltner band or a Bollinger band expansion, I would take the trade or take a certain percentage of it off ahead of that. I don't wait for it to get to it, because oftentimes it'll never make it there. The same goes for execution. I am not particular about, nor have I ever been particular about getting a fill at a certain price. So setting a limit up somewhere and just waiting for it to get filled. I rarely use limit orders. I'll just execute when I see something look favorable in the footprint. I'll just execute it right there with a market order. And because when you have limit orders and you have set stops, which I do use a hard stop of 4 points on most of my trades. I do not recommend that for somebody that is new or not profitable. That is not, that's a lot of heat to take on a particular trade. You know, if you guys get proficient in learning how to read all this stuff, you're not as concerned about the stops that you set and the profits that you take, because you know how the structure is building out. You know what it's going to look like in terms of where it is, and you know, you may see that it goes down, but you know, as a goal, in just a dollar term goal, as a newer ES trader, I'd probably want to make about $750 a day. Anywhere between $5 to $750 a day, you'll be well on your path to building a nice fat account and being consistently profitable. Hopefully that answers your question. Anybody else? Speak now or forever hold your peace is the last slide. And let me just see if I can make this larger. Here's our shameless promotion. So if you guys want, you can join the trading room. 3 days for $1. 15-day free trial on the daily chart analysis. I update that approximately 9 a.m.-ish, just before I start the room, East Coast time every day. And I'll show a lot of the charts that I've showed. I show my, well heck, why don't I just go show you what I show. Go right back into homepage. Then you just click on, excuse me while my phone rings, you just click on the member access area. You click on to daily charts, and it takes you right into the review I do. So I'll talk a little about what's going on in the market. If you guys can see this screen, let me know. If you can't, I throw some opinions in here. You know, let's face it, I'm an East Coast Italian. I'm somewhat outspoken, and that's fine. I think a lot of people in the room appreciate that. Sometimes you get kind of biased in the review, but hey, you know, we want to be able to see the numbers each day, okay? We go through not only the numbers each day, but we take a look at the composite, so you guys will see a chart of the composite, how the profile's built out. A lot of times I'll make annotations on these pictures to you guys. Also, I want to occasionally, and I'll also preview the news that's breaking out the next day, or anything that's setting up big, like an FOMC minutes release or some Fed governor speaking. Sometimes I'll post, which I thought was interesting. Here's a good piece I saw on the distance from the 200 SMA on the S&P. You know, when we get really, really expanded out, we have a tendency to pull back. In many cases, that's a top. So you guys can go in and read that. So if you want to sign up for any of that members section, and or you can click any of these bars on the home page to sign up for it as well. Any other questions? I'm almost perfectly at an hour on this. David, if you give me about a day or so, I will have the video edited and it will be uploaded to YouTube, in which case you can watch it. Yeah, same thing, Kevin. That'll be edited and uploaded as well. All right, guys, I'm going to end this if we don't have any other questions. If you guys have any additional questions, you can always shoot me an email. It's just steve@fxestrader.com. There's me. Simple enough. Got any questions? No question is dumb. The only question that's dumb is the one that does not get asked, right, Eric? So, Eric's my partner in crime, and he's. I want to thank him for helping us administer the webinar today. Thanks everybody for joining us. We'll call it a day. Give me a day or so to get this all edited and uploaded, and thank you for joining us.